Gold-backed ETFs are seeing their largest inflows since April 2017. With me now at the Minds of Money conference here in New York City is Juan Carlos Artigas, Director of Investment Research for the World Gold Council. Juan Carlos, welcome back.
Well, thank you so much for having me.
So happy to have you on because I saw there was, record inflows in the month of March, but now we have the numbers for April. So let's talk about what we're seeing here.
Absolutely. In particular in April, we had very, very strong inflows into ETFs, the largest since February actually last year, so a little bit more than a year. And actually Q1 was somewhat muted, especially compared to Q1 2017. It was about 66% down. It was still inflows, consistent inflows that we continue to see from different regions. But April, I think that it stood out. And April stood out because you had strong inflows in North America. You also had strong inflows from Europe, which had seen some net outflows in previous months. And you also had a slight net positive increase in Asia.
So what do you think is driving this demand, this trend?
When you look at the gold market, and in particular try to understand the drivers of gold, over the long run, wealth and economic expansion are really, really important, and they drive physical demand. But in particular, ETFs as an investment, they tend to respond to additional factors like market uncertainty or the strength of currencies. And as well as, perhaps the opportunity cost of investing in gold versus something else.
Maybe you can explain to me those, Juan Carlos, because sometimes I see numbers that the World Gold Council is reporting for ETF inflows versus, another firm like ETF Securities, and we could see huge discrepancies. So how do I know which numbers to be looking at here?
Look, we track on a regular basis 76 gold-backed ETFs and similar funds. So products that are investment vehicles that are backed by gold around the world. So it's a very, very comprehensive list. As far as we know, is the largest one available. Now, in particular, what happened in Q1 that may have thrown some figures off from other market participants is that in China, we started to see consistent inflows into one of the Bosera funds, very consistent at the beginning of the year. Now, those inflows were not new money coming in. Actually, they were transferring funds from another gold-backed fund that they had that is not listed, right? And it reports only quarterly. So we only learn about it at the end of the quarter, and that's where we are.
And for the viewers at home, because I believe ETF Securities was reporting 20 tons in the month of March versus World Gold Council, which had about 7 tons.
Exactly, and the 12 or so of differential, the 12 differential is basically coming from that particular fund.
I know you were a participant during my panel discussion yesterday, where we often talk about how fear and risk drives the price of gold, but you had a very good observation. You say sometimes we have to stop having this discussion when it comes to price of gold, right? There's more to it.
Absolutely, and it's a matter of short versus long-term drivers. When you look at price discovery, and which is driven by investment, whether it is in physical markets or in the OTC markets or on futures exchanges, many investors are going to be using metrics like market uncertainty or the strength of the dollar or opportunity cost, potentially momentum to position themselves. But over the long run, what we know is that wealth and economic expansion is a really, really important driver.
So what you're seeing on that front, is that conducive to a gold rally?
Over the long run, that's actually what underpins the trend in gold. If you look back to the beginning of the century, 2000, to where we are now, a large portion of the growth in the gold market and of course the resulting price of gold can be linked to the expansion of emerging markets and the important role that Asian economies play for gold.
What about the price of gold within this rising interest rate environment? How much of an impact does it have here?
That's very timely, of course, because everybody's thinking about the Fed. What we see, of course, is that higher interest rates increase the opportunity cost of investing in gold. However, historically, higher interest rates do not necessarily result in a falling gold price because interest rates would need to be really high in real terms, not only in nominal terms as we're seeing now, but really high in real terms, and we're talking about at least 2.5 real, right? On the short-term part of the bond, for them to properly start creating pressure. Why? Well, because there are many drivers of gold. As we said, wealth and economic expansion is a good driver, and wealth and economic expansion often happens in rising rate environments, right? So you have that counterbalance. So you need to put attention, for example, in recent days to, conversations on market uncertainty, the coordinated economic expansion around the world that is creating a positive effect on gold. And in fact, gold is in positive territory so far. It's one of the best performing asset classes this year.
Juan Carlos, very good thoughts. Thank you for stopping by.
Well, thank you for having me.
And thank you for watching. We'll have much more coverage for you on Kitco.com. Thanks, Juan Carlos. Pleasure.